Good morning, everyone. It's 10:30, so time to make a start. Welcome and thank you for being here today at the 2016 annual meeting of shareholders of Turners Limited. My name's Grant Baker and I'm the chairman of the board. Today's an opportunity for you to hear from both myself and our CEO, Todd Hunter, on the positive progress we're making at Turners and the new initiatives we've underway to further boost our company's growth. Following our presentations, there'll be an opportunity for discussion and any questions you may have in regard to the presentations. We'll answer questions on the resolutions at the time they're proposed, and there'll be a further opportunity at the end of the meeting for you to ask any other questions about the company or our operations. Before we start, I'd like to introduce you to my fellow directors. Firstly, Paul Burns. Paul stepped down as CEO this year in June this year, but he remains an executive director on the board and he's focused on M&A activity. Matthew Harrison, towards the end of the table there. Alistair Petrie, John Roberts and Anthony Bryans. As has been notified to the NZX, John Gosney was up for re-election this year but has decided to retire at today's meeting. John has been a director since May 2008, initially as an independent director and more recently as a representative of Hugh Green Investments, which is one of Turners' largest investors. John's been an important contributor to the company's restructure and re-emergence following the GFC, and his experience in property transactions and property development has been particularly valuable during that time. Hugh Green Investments is not seeking a replacement at this stage, and we're not looking to appoint another director to the board. It was also very sad to lose Michael Dosser earlier this year. Michael had been associated with the Turners brand for over 50 years. He'd been a director of Turners Auctions since it listed in 2002 and was chairman of Turners Auctions from 2003. He joined the Turners Limited board in January 2015 and he was an active and positive contributor. Alistair Petrie was appointed to fill the vacancy left by Michael's passing and will be standing for election today by shareholders. A number of our directors either have their own shareholdings or represent third parties who have significant shareholdings in our company. We believe this creates further alignment with all our shareholders, with everyone benefiting as we deliver increasing value. As our company evolves, we regularly review board composition and the skills and experience needed to add value as we continue to grow. In the last 2 years, we've appointed 3 new directors, 2 of whom are independent. Our leadership team has also grown in the past 2 years and a number of our senior managers and staff are with us here today, so welcome to all of you. I'm particularly pleased to welcome Todd Hunter, to my right here, to his first annual meeting as our new CEO. Todd was previously CEO of Turners Auctions before it delisted and is now both CEO of the Turners Automotive business that you see here and also the wider Turners Group. So Todd succeeded Paul in June this year. Also in attendance today are the company's auditors, Staples Rodway, and our other advisors. So thank you to all these firms that provide valuable services to Turners. The notice of meeting and the 2016 annual report and financial statements have been circulated or made available to shareholders. A quorum is present and I therefore declare the meeting open. We have a clear vision to build an integrated automotive financial services organisation where we not only provide valuable finance, insurance and debt management services, but also have access to a highly targeted group of customers. Turners continues to grow and our focus is primarily on the automotive sector where we operate in both the transactional market as well as offering automotive and other non-automotive finance and insurance products. We also have a strength in debt management, building on our capability in the financial services sector. While each of our businesses is profitable on a standalone basis, there's also a nice synergy between all 3 of our operating areas. Automotive retail provides opportunities to cross-sell our finance and insurance products, and while our bad debt levels are very low at about 1%, our debt management business provides credit management services that can aid our business if needed. Our strategy remains very focused on growth. Each of our businesses has specific opportunities to grow in their own market, and we're always identifying and assessing accretive mergers and acquisitions. Cross-selling within our business is also aiding our growth. As an example, well over 50% of our automotive insurance products are generated from within the group. Our people are the key to our growth strategy, and we now have over 560 employees, many of whom are long-term staff members. This is up from 42 staff just 6 years ago. We encourage them to continually seek new and better ways to service their customers, which will in turn deliver growing results to our company. We'll continue to invest in building a strong team and providing a workplace that rewards their efforts. On behalf of the Board of Management, I would like to acknowledge and thank all our employees for their contributions in the last year. Our growth is not only commercial, it's also physical, and our footprint has continued to expand. We now have a national network of 27 branded automotive retail sites, and our online presence continues to grow. We have a referral network for our financial and insurance services of approximately 500 sites across the country. And our debt management business has offices in New Zealand and Australia. We have a continuing track record of year-on-year improvements. Earnings are growing and we're gaining market share while shareholder value is increasing. In the past 5 years, operating revenue has increased from just under $10 million to $172 million, and our tax-paid profit has grown from a loss to over $15 million. Importantly, our shareholders' funds have also increased, up 437% in the last 5 years to $130 million. This is a reflection of both organic growth and smart acquisitions, which are adding value to our group. We continue to set ourselves challenging profit targets, and to date we've exceeded every guidance and budget target set. We're proud to be able to translate these returns into value for our shareholders through the commencement of dividend payments in 2014. For FY16, we paid a full-year dividend of 13 cents per share. As announced, we're moving to quarterly dividend payments, which we believe will deliver a more regular earnings stream to our shareholders. We expect future dividends to be fully imputed, and our policy remains a payout between 50 and 55% of net profit after tax. While we've delivered significant year-on-year improvements in our financial results, more than doubled the size of our company and developed a clear vision and strategy, we don't believe this has been recognised in our market value. Our share price has not kept pace with our successful track record, growing by only 10% in the last 4 years. The Board's very aware of this and has identified a number of strategies to improve market awareness of Turners as a positive and valuable investment opportunity. Along with a focus on improving financial performance, we're looking for more opportunities to tell our story. We're committed to keeping the market updated on our progress, and we'll be looking to increase our communications and provide more information on the current and future opportunities open to us. We are undertaking more frequent engagement with the investment community in both institutional and retail markets. We've strengthened our share register and encouraging investment from a wider shareholder base, particularly retail shareholders. In addition, our shareholders will be rewarded with more regular quarterly dividend payments. Finally, and very pleasingly, both First New Zealand Capital and Craig's Investment Partners have confirmed they will be commencing analyst coverage of Turners, which is another good opportunity to share our story. We have a diversified debt and capital funding base. Where appropriate, we use shares as part of payment for acquisitions, as we've done recently with Buy-Right Cars. During FY16, we also undertook a buyback of small shareholdings and a 1-for-10 share consolidation to strengthen our share register. Our borrowings are to fund our loan book and acquisitions, and we're pleased to have a long-term and supportive banking partner. We have the headroom to support further potential opportunities, a number of which are now under review. We're currently implementing a securitisation funding model, which will reduce our cost of funds, create further growth headroom, and strengthen our funding base for our finance business. Our bond program also provides additional funding for our acquisition program. As you will all know, our current bond program is due to mature at the end of September, and a new program is to be offered, conditional on shareholder approval at today's meeting. Bonds have proven to be a cost-effective and successful funding channel, and we have had strong support from our shareholders. 75% of current bondholders have exercised the option to receive their returns, worth nearly $17.5 million in Turners shares rather than cash, which is a great outcome for our company and reflects the bondholders' confidence in our strategy. We're proposing a new 2-year $25 million bond program at an annual interest rate of 6.5%. This is a similar structure to the 2014 program, and existing bondholders will be given preference. We've received positive feedback from the market on this program. The 2016 financial year was another one of positive progress for Turners. We acquired 2 new businesses, Greenwich Life and Southern Finance, and increased our investment in motor trade finance to a shareholding of 8%. Acquisition has continued into the current financial year, with Pacific Life and By-Right Cars joining our group. We welcomed Alistair Petrie to the board, and Todd Hunter was announced as the new CEO for Turners Limited. As mentioned, we also strengthened the share register, completing the buyback of small shareholdings and a 1-for-10 share consolidation. Turners is in excellent shape, and we have an exciting future ahead of us. We have a clearly defined strategy and a portfolio of strong businesses delivering sustainable profits and increasing cash flows. We operate in a growth sector. Automotive sales are increasing, and with that comes a corresponding uplift in demand for automotive finance and insurance products. Our growth strategy is bearing fruit, with a number of opportunities to continue building our business through smart acquisition, cross-selling and organic growth. We have a strong capital structure and relatively conservative balance sheet, with plenty of capacity to continue funding our growth. The experience, knowledge and skills of our leadership team are essential elements in our success, and their activities are overseen by a professional and engaged board. We're focused on continuing to deliver increasing value for our shareholders. Thank you for your support for our company. I'll now pass you over to Todd Hunter to give you more detail on each of our businesses and our performance over the last year. Thanks.
Thank you, Grant. It's great to have the annual meeting for Turners back here in the showroom. It's been a few years since it's been here, so it's good to have it back. The Turners Group is made up of businesses operating in 3 different but integrated sectors. We primarily operate in the automotive sector, as you all know, with approximately 80% of our revenue and operating profit derived from either automotive sales or related finance and insurance products. Automotive retail delivers 2/3 of our revenue, but at lower margins. Finance and insurance revenue generation is lower, but it provides a high percentage of our profit. We also have strong capability in debt management services for both automotive and non-automotive businesses. The 2016 year was one of which we are very proud. Revenue and earnings were both up on previous years, including a full 12-month contribution from Turners Group and 8 months from Southern Finance. Net profit before tax was up 13% to $21.6 million, and if you exclude $7 million of one-off gains in the previous year, that's a 50% increase. Net profit after tax of $15.6 million was fully taxed and exceeded our guidance. Pleasingly, all our operating businesses delivered an improved trading result. You can see the evolution of our business over the past 5 years reflected in the chart at the bottom. Automotive retail is the main engine of our group, pardon the pun, but it is the main engine of the group. We have a multi-channel strategy in place and are focused on providing more and better ways for retail customers, in particular to buy and sell vehicles from us. The industry is highly fragmented, and despite being the number 1 market player, we hold well less than 10% market share. We've started to build on this and recently acquired By-Right Cars, a group of successful car dealerships in Auckland. As you all know, Turners is a household name with strong brand qualities and recognition. There is an enormous opportunity for us to leverage the value in that brand. The automotive retail business not only delivers us a transactional margin on each sale, it also provides opportunities for us to cross-sell the finance and insurance products from within the group. We're investing in all steps of the customer process, better engagement and marketing to attract customers, more channels and opportunities to make it easier for those customers to buy and sell from us, and improving how we interact with customers to drive our cross-sell of finance and insurance products. The automotive retail sector is growing and growing fast. It's at its highest level since the GFC, with nearly 1.4 million transactions per year. These are very, very big markets. We expect to see this growth continue, particularly as the large number of vehicles imported in the mid-90s reach the end of their life. Just a quick insight into that, there are over 700,000 vehicles registered on New Zealand roads that are 20 years or older. So it's more than 20% of the registered vehicle fleet in New Zealand. We think we're well placed for growth, and we have a number of initiatives underway to increase our market share, including building our online presence, creation of new mobile technologies to make it easier for our customers to transact with us, and developing partnerships with other retail businesses and M&A opportunities. Revenue from the automotive retail business has continued to grow. The balance date was changed in FY15 following the acquisition by Turners Limited of Turners Auctions. So we have normalised the figures for that year as if it had been a 12-month period. Revenue increased by 9% in 2016, consistent with the 5-year growth rate, while operating profit was up 45%, reflecting an increase in higher margin retail sales and improvements in our attach rates of finance and insurance products. Our decision to separate trucks and machinery away from the core cars business and invest into 2 standalone sites has proven very successful, with a 26% increase in trucks and machinery sales in the past year. Buy Right Cars is an example of a smart investment into growth for our automotive retail business. It is a leading Auckland-based motor vehicle importer and dealership network. The acquisition expands our Auckland footprint, which is underweight compared to other regions, and adds capability through its compliance and service centre. A large percentage of their sales are financed, which provides cross-sell opportunities for our finance and insurance business. The business is generating strong profits and is expected to deliver in excess of 4 million in operating profit in the first year. We also believe we can realise additional synergies and back office efficiencies which will drive up returns from this acquisition. Finance insurance, as I mentioned earlier, is our biggest profit generator. We own a number of brands and businesses and offer flexible finance and insurance products, mostly for the automotive segment, but also for small businesses and personal customers. Our products are sold both directly and indirectly through a network of 500 dealers and brokers. Having a direct link to the origination transaction through Turners Automotive is beneficial for us, as it means less competition and more control over our relationship with that customer. Our finance book has increased 17% to 168 million in FY16 and is funded by a mix of bank debt and shareholder funding. As Grant has mentioned, we are implementing a new securitisation funding model which will require us to hold less capital and will be more cost effective. Approximately 80% of used car purchases utilise some form of financing, and we estimate there are approximately 350,000 transactions per year directly in the space that we operate in. To put that in context, currently we finance approximately 11,000 transactions per year, so there is huge opportunity for growth for us. The market is highly fragmented and very competitive, and with third-party lending through dealerships. We have very strong relationships with dealers across New Zealand and continue to invest in these and ensuring we have a competitive offer. We have also continued to develop our relationship with MTF since building our shareholding up to 8% over the last 12 months. We are currently working with MTF on a partnership arrangement to help them extend their product offering in the finance and insurance space. Financially, this group of businesses is a really strong performer, despite the increasing competition we have in the market. Interest income was up 26% in the last year, and other revenue, which is mostly the insurance revenue, was up 43%. The number of loans and new insurance policies continues to grow, and we are consistently achieving new milestones in motor vehicle breakdown and motor vehicle insurance policies sold per month. Just to give you a bit of insight there, in August we sold over 1,400 general insurance policies, which was up from 760 the same time last year. We acquired Greenwich Life during the year and added Pacific Life to our portfolio following year end. While these are smaller acquisitions, they provide new distribution channels for our life products. We have one business in the debt management sector, a very good business, EC Credit, which provides a total debt management solution for New Zealand and Australian customers. It has a growing reputation in Australia and is recognised as a major player for corporate collections here in the New Zealand market. This is reflected in the revenue split, with 60% of the revenue being generated in New Zealand. The business is highly cash generative and requires very little capital to run. It is a great solid earner for our company. There is still plenty of room for growth, and we've identified a couple of sectors where we have a strong offer and can build on our customer base. These include the SME market in both New Zealand and Australia, where we can offer a one-stop shop solution, and the corporate debt market, particularly the banking sector. We're getting ever so close to landing a banking client in Australia, and I know you've probably heard that before. But the sales cycles are very long and are absolutely a test of our fortitude and patience. However, we are getting closer. Technology is changing how credit management services are delivered, and we are monitoring this trend and identifying ways that we can use this to our advantage. The use of data is an area of particular interest. Projects like using data to build a collection scorecard, which allow us to rank debtors on a propensity to collect basis, could significantly improve our collections performance and our cost to collect. This was a record year for our debt management business, despite the economic slowdown in Australia, where approximately 40% of revenues are derived. The increase was mainly driven by demand from New Zealand banks and institutional clients. The focus in FY16 was on improving our business efficiencies and strengthening the management team. So, where to next for our company? There are significant opportunities for growth, and we are very focused on both M&A, led by Paul Burns, organic growth within each of our businesses, and obviously the cross-selling of the finance and insurance products across the group. Automotive retail and finance and insurance are our targeted growth areas. In automotive retail, we will continue to seek both organic growth and acquisition opportunities. We'll continue to build on our successful multi-channel retail strategy and targeting retail customers. The opportunity in the second-hand trucks and machinery market is proving attractive, and we will look to keep building our presence in this area. Acquisitions of strategic property sites are becoming an increasingly important part of our growth strategy. It allows us for further footprint expansion as the business grows and to achieve stronger control over our property overheads. In August, we announced the purchase of a third property in South Auckland, which is to accommodate some of the growth in our trucks and machinery business, and we're working on another deal in Wellington at the moment. In finance and insurance, we're looking to build sales both through direct channels as well as through our dealer and broker networks. Motor trade finance has a growing network and offers a new channel for our business. We are progressing the securitisation program, which allows us to reduce funding costs, and we'll also look to consolidate our brands and back office. Acquisition of quality bolt-on businesses will also be considered. Excuse me. As it is for a lot of businesses today, technology offers immense opportunities for this business as well, and we'll continue to identify ways to connect with a wider audience, making it easier for our customers to transact with us and improve efficiencies. One of these initiatives is Cartopia. You can see some of the branding in the car over here. We think Cartopia is an exciting new initiative. It's New Zealand's first online-only car store, designed to deliver a premium experience for customers. We've done extensive research, and it's allowed us to identify the things that those customers are looking for, and we've incorporated that into our new online store, which is very much based on no pressure browsing, convenience, transparency, and compelling pricing. And along with this, we've completely de-risked the purchase process by introducing a 7-day right of return and delivery to your door. Cartopia takes advantage of the growing popularity of online-only car purchases. So in the United States, as an example, some of the largest car retailers are now online only. It leverages Turners Group existing infrastructure, processes and capability, and extends its nationwide bricks and mortar presence into the online world. We're very excited about this new channel, and following a soft launch, we will be investing into marketing and advertising to build awareness about this from later this month and over the next year. Auto App is another new initiative utilising technology in the finance space. This is a new online loan approval platform and credit scoring system designed in-house, which provides fast turnaround on loan approvals for dealers and brokers. So the idea is that you get a very quick answer to the dealers who have the customers in front of them. We've received great feedback since a limited launch in May this year, and we'll be rolling it out across the rest of our finance business over the next 12 months. For the 5 months to 31 August 2016, results are ahead of budget and well ahead of the same time last year. We expect to report an interim profit after tax of around $11.6 million for the 6 months to the 30th September. In terms of the full year, we would expect around 10% year-on-year organic growth from our existing businesses, with contributions from any M&A activity in addition to this. Thanks very much for your time. I'd encourage you to have a walk around the business while you're here. Obviously, this is a great chance for you to experience the business firsthand. There are lots of people wanting to talk to you about cars out there. They may even do you a deal. Now I'll pass back to Grant.
Thanks, Todd. I'd now like to invite questions in relation to the annual report or today's presentations. There will be an opportunity later on to ask questions about each formal resolution as they are put to shareholders. If you have a question, could you please clearly state your name if you're a shareholder, or if you're a proxy holder or corporate representative, please state the interest you represent.
Brian Trenworth, a shareholder. Trade Me has first up advantage. How do you see Cartopia managing in the online space when there is an established player?
Well, it's an interesting question because Trade Me is quite a different business. So they're selling, it's a format for people selling, personal people selling to other personal people, whereas Cartopia is us selling cars to end user customers. But I know Todd has got some interesting stats on how many people look at our website compared to looking at Trade Me. It's actually quite surprising. So if you mind sharing that, Todd?
Yeah, sure. Yeah. I mean, the way to think about Trade Me is it's really an advertising platform. It has replaced the old classified systems in the newspaper, and Cartopia may still place ads on Trade Me to attract audience. But in terms of the turners.co.nz audience reach now, we think we're about, well, we are second in the market. Obviously, Trade Me are the biggest, but we get half the traffic that Trade Me do. So our ability to reach customers directly without having to use Trade Me is because, you know, we've got less and less reliance on them as a mechanism to do that. So Trade Me Motors is really quite a different business to what Cartopia is. I mean, think about Cartopia as an online dealership. Trade Me is really an advertising platform. Yep.
Yes, Edwin Stranahan, I'm a shareholder. The consolidation that the company did of a 1 to 10, I was very 10 to 1, sorry. I was very surprised that it was set so high, because I think that's a psychological barrier when you get up to the $3. And I think the growth in the shares has reflected that. Would someone like to comment on the thought that went into, or did you just simply ask one of the so-called experts? They said 1 for 10 and away you went. And then I had another question after, if I could, please.
Okay. I don't know if some of my fellow directors want to comment on that. You're welcome. But the reason we didn't want to stay a kind of 30-cent share is we didn't want to be in that penny dreadful area. And there was, if you ever watched the papers on the big risers and fallers, you know, we were always in that because you move a cent or two and your percentage moves are very large. And we did think about, you know, 1 for 5 or for 10, and just really to get us in the area we wanted to do in terms of credibility, we went for the 10 for 1.
1 for 5 or 1 for 6 or something like that.
I guess because we decided the 10 was better. Yeah. And, you know, obviously we don't know what would have happened if we had done that.
I think it's a psychological barrier, and this is why you're talking about a 10% growth in the shares, but what's the 10%? Where does that come in? It's gone from about $3 to $3.09, hasn't it?
No, I think the range was something like 275 to about 308 or 309 yesterday, something like that. Yeah. Yeah.
What?
Might be worth adding that the 1 for 10, or 10 for 1, got us to the median price of the market. So rather than take 2 steps, if we were going to do a consolidation, we might as well consolidate to what the median of all the listed shares was, and the median of all listed shares is somewhere around $2.90.
Sorry, you had another question.
Yeah, yes, the other question that I had was relating to the, you're trying to get a greater share of motor trade finance. You're competing with Heartlands in that, aren't you? They're seeking to do the same. They're pretty confident that they're going to increase theirs. Do you talk to them about doing a deal, buying their part, or anything like that?
We haven't talked to Heartland, but Motor Trade Finance's constitution says that no one shareholder can hold more than 10%. So at the
Unless
moment,
it's changed.
it hasn't. Well, yes, it could be changed, but it's got to be, I think, a 90% vote to change it. It's quite significant to change. I don't know if you want to add anything to that, Todd?
Yeah, great. Well, firstly, Heartland aren't a shareholder of MTF. They've never owned shares, and they haven't been able to own shares. And MTF ran a process earlier this year to kind of tease out the noise that Heartland were making about putting an offer forward, and nothing has ever come of that. That process is finished, it's closed, and as far as we're aware, Heartland are, focusing on other things.
Thank you.
Hello, Alan Best, shareholder. In the segment analysis, Grant, the corporate segment actually is quite big. Most corporate segments are relatively small and often make a loss because they are charging out their costs to the divisions. In your case, it's actually quite large. And I wondered what you've got in there. You've got about 219 million of assets and an operating profit of 6 million, something like that. What are you putting in there in relation to the segments? And also, I suppose, related to that, do you feel that with the merger and acquisition activity that you've undertaken, that you've got clear accountability for the various divisions as far as management is concerned?
Well, to answer the second part of that question, yes, I think we do have standalone businesses that are very accountable, and we report on them every month at our board meeting, how they're going against target and are they pulling their weight, etc. I think to answer the first part of that question, I'll hand over to someone with some accounting experience. So Todd, can you take that, please?
Well, mostly it's interest cost in that corporate cost line, relating to the acquisition. The acquisition borrowing, so that's why it appears higher.
Right, anything else? Yes, someone over here.
Peter Goldheim, shareholder. Is Cartopia going to be selling new cars, or is it just second-hand?
It's just second-hand. For the foreseeable future, new cars hasn't been part of our thinking yet. So the stock on there are cars that we own, and we've signed up a couple of preferred suppliers with 2 lease companies. So it's high quality used cars, 3 or 4 year old cars that have been ex-company cars and things like that.
Well, it sounds a brilliant concept, and if it's the biggest segment in the American market for, I presume, new cars, is that correct?
For used cars, actually.
For used cars?
Yeah.
So is it a significant sector, new cars? Or?
Yeah, interestingly, there are some quite interesting things happening in the States around new cars as well. So you have entities like Costco, which is a big big box retailer, are now the second biggest seller of new cars in the American market. So there are interesting things happening in the new car space over there as well, which we keep an eye on.
I mean, the concept of what you have in Cartopia, I mean, as a car buyer, I mean, I'd be quite happy to buy a car without seeing it and driving it, and if I didn't like it, I'd change it in 7 days. I mean,
Yeah, exactly. Yeah,
could be a good opportunity for new cars.
Yeah,
Thanks.
Yeah.
Anyone else? Right, thank you. I'd now like to move to the formal resolutions notified in the meeting. Voting of each resolution will be by poll. Staples Rodway, the company's auditors, will act as scrutineers. Please use the voting paper you've received in the mail or were given when you registered for this meeting. If you do not have a voting paper, you'll be able to request one when the voting takes place. The first resolution is to record the reappointment of Staples Rodway as auditors of the company and authorise the directors to fix the auditors' remuneration. Are there any questions from the floor on this resolution? I would then like to put this resolution. Please mark your voting paper. Thank you. The next 2 resolutions relate to director appointments. Since the notice of meeting was issued, John Gosney, who was due to retire by rotation, has advised that he will not be seeking re-election. Resolution 2 actually relates to my own re-election, so I'll ask Paul Burns to lead discussion on this resolution. I think I have to talk first here, Paul. So. No, as you were. So I have to say a few words in support of my re-election. So I've made a few notes here. I'll keep it short because no doubt you've heard enough from me today. So just a bit of a verbal CV. So where I started my working life was in sales and sales management with Xerox Corporation. Over time I moved into general management, and then ultimately I was appointed CEO of Blue Star Group. Some of you will remember, it was quite a long time ago now, and Ubix Business Machines. I was a shareholder in Blue Star Group, and some of you also remember we sold that business to US Office Products about 20 years ago. I was then involved in a number of startup businesses, one called Empower, where I was the executive chairman. Also, I'm sure you've heard of 42 Below, where I was also the executive chairman, and I'm currently an executive director of Trilogy International. I'm just coming to my 8th year, or starting my 8th year with Turners. When I joined, the company had a market cap of about $2 million, and it's now around $200 million. So I think we've had, a good result. But the other thing is, I don't think the journey is anywhere near finished. I think we've got a lot of opportunity to grow more, as Todd and I pointed out today, and I'm very keen to be part of that future. So I would appreciate your votes. Thank you. Now I'll hand over to Paul.
Thank you, Grant. So the resolution is to re-elect Grant Baker as a director. Do shareholders have any questions for Grant? No? If not, I'd like to put the resolution as is in the notice of meeting and on the screen, and please mark your voting paper accordingly. And thank you, Grant.
Thanks, Paul. Resolution 4 is the election of Alistair Petrie as director. Alistair was appointed by the board in January 2015. Alistair has more than 15 years of senior management experience in private and listed companies and extensive sales and marketing knowledge. Alistair represents Bartel Holdings, which has just under a 7% shareholding in Turners. I'll ask Alistair to say a few words in support of his election.
Thanks, Grant. Excuse me. As mentioned, I represent the Naboa family through Bartel Holdings, and they've actually been a shareholder of Turner's Car Auctions for 24 years. So it was 1992 when they first came in, firstly as a division of the Turners and Growers Group, then as a standalone public company, and obviously recently through the now Turners Group. So I've actually been indirectly involved in the car side of the business, firstly as part of the TNG senior executive team, and then through the late Michael Dosser, who was chairman for a number of years and was actually my sort of business mentor through my whole career. And I did work for 8 years with a previous CEO of Turner's Auctions and some other senior managers who tried their hand in the horticultural industry, and they constantly hijacked the meetings with deals on cars and couldn't believe how unprofitable cabbages were compared to cars. As Graham mentioned, I have extensive management experience leading large teams, very much a sales and marketing sort of background, and believe along with some fresh thinking, is a skill set that complements the board. I have a BSc in Honours from Newcastle upon Tyne in the UK, and have an exec MBA degree from the Melbourne Business School. Naboa, with Bartel Holdings, are a committed shareholder, and they recognise the advantage of coming together what was the Dorchester Group to deliver origination and growth. And Naboa was the largest shareholder and will be converting at the conclusion of the first round, and has every confidence in the business is looking to take up a similar allocation in the next round. So we're very supportive of the management team under Todd and the current business model, and excited about the growth and opportunities ahead. And I certainly look forward to working with the board and management team to deliver this result for all shareholders. So, like with Grant, I appreciate your vote. Thank you. Any questions?
Okay. I would now like to put this resolution, so please mark your voting paper. So resolutions 5 and 6, the issue of shares. The next two resolutions relate to the issue of shares to the vendors of by right cars under the sale and purchase agreement. So resolution 5 is to approve and ratify the issue of 612,000 shares on 29 July 2016 at an issue price of $3 each. Under NZX listing rules, the company is allowed to issue up to 20% of its issued share capital in any 12-month period without prior shareholder approval. The company can refresh that capacity when part or all of it has been utilised by obtaining shareholder ratification. The ratification would then provide us with more flexibility to issue shares as consideration for potential further acquisitions in the current 12-month period. Are there any questions on this?
Are there any provisions in that 612,000 allocation, any provisions regarding holding that for a period of time before they can sell?
Yes, there is. They are subject to a lock-up of 12 months. Any further questions? I would then like to put this resolution. Please mark your voting paper. Resolution 6 is to approve the further issue of shares at an issue price of $3 each to the vendors of by right cars for the first two earn-out periods for the year ending 29 July 2017. The number of shares will be determined by the business performance of by right cars during that earn-out period. Are there any questions? I'd like to put this resolution, so please mark your voting paper. The final resolution relates to the issue of 2-year bonds and the potential issue of shares on any future conversion of those bonds into shares in the company. The bond program is similar to the 2014 issue. The details have been outlined in the explanatory notes for the meeting. The proceeds from the bond issue are to be applied towards repaying existing financing for the Turners, including redemption of existing bonds and providing additional funding for Turner's ongoing acquisition strategy. A number of our larger shareholders have indicated that they will participate in the further bond issue. An independent appraisal report states that the offer of bonds to the related parties identified in the notice of meeting is fair to shareholders not associated with those persons and is in the best interest of the company. Are there any questions or discussions regarding this resolution?
Alan Best again. This just relates to the gearing of the company. Is it expected that it would alter very much from the 57% that is in the annual report?
I think the securitisation will change a little bit.
Yeah.
So at the moment in our lending book, we have a lot of equity in that lending book, and with securitisation, you don't have to have as much. So we have currently around 30% equity in every dollar we lend, so we probably prefer to be more geared than less geared in the finance book.
Yes.
Yeah. Right, I'd now like to put this resolution, so please mark your voting paper. And thank you, and that concludes the formal voting. Many shareholders who are not attending this meeting have voted by proxy. Proxies were received for 37 million shares, being 58% of the total shares on issue. If you have any difficulty completing your voting paper or do not have one, please raise your hand and someone will assist you. Once everyone's finished voting, the scrutineers will collect the paper. So I've got a note here that we've got about 3 minutes to do that. Yeah, so we've got to be quick. Scrutineers will now collect the voting papers, so could shareholders please pass their voting papers to the scrutineers as they pass through. The results of today's voting will be posted to the NZX as soon as practicable. All right, seems like we're done. That brings the formal part of the meeting to a close. Is there any other business shareholders would like to discuss in regards to today's presentation or Turner's progress?
Really just to congratulate you on the forward-looking work that you're doing with the company and the good results that you're achieving. I think it's in order just to add that comment.
All right, well, thanks. I'm sure all the staff here and my fellow directors are really appreciative of that. Yeah. Okay, if there's nothing else, I therefore call the 2016 annual meeting of shareholders closed. Thank you all for your attendance today. I would like to invite you to join the board and management for refreshments. Thank you.